What is a fair PE ratio for Tesla? What is the opportunity for Tesla over the next 3 years? What am I doing with Tesla now? Stay tuned for all of this and more. And Tesla's PE ratio, of course, before they were profitable, it was infinity or zero, but then it shot all the way up to over 1,000, 1,100, and then has steadily come down all the way to 40 or even lower. But it goes back to our question, what is a fair PE ratio for Tesla now that they are a significant company that is growing? I'm going to lean a lot on a blog post by Fallacy Alarm on his Substack. So shout out to him. He's a really underrated Tesla investing account. I definitely recommend it. I'm going to use some of his charts and analysis in this video. What Fallacy Alarm did is he looked at US companies that have a market cap over $1 billion and positive earnings per share estimates through to 2025. And he also eliminated real estate companies, financial services, insurance, and biotech because those can be unique industries. And he took the remaining about 900 companies and he plotted their Wall Street expected earnings per share relative to their growth rate. For all those 900 companies, he got a plot like this, a 3-year average earnings per share growth rate and their PE ratio respective to each one. And as you can see, it tends to follow a somewhat linear relationship. A lot of the companies kind of bunching along this linear line. Of course, some higher than that, some lower than that. It all depends on how certain you are in the growth potential of each company, which no one knows for certain. But he's plotted out this line and got a linear relationship between the average earning per share growth and the PE ratio of each company. Fair PE value would be about a 13.8, so a PE ratio of about 13.8 plus the growth percentage times 0.8. That's the slope of that line. So if there was no growth at all, you should have a PE ratio that would be fair of about 13 or 14, 13.8. But for every percent growth that you're growing year over year, you should have another 0.8 added to your PE ratio. That's the linear relationship that we see here in the graph. And if you do the math on that, so a 10% growth rate would be a 22x, 20% about 30x, 30%, 38, 40, 46, 50% growth rate, you'd have a 54, 55% of PE, and 60% growth rate would be more like a 63 PE ratio, would be an appropriate fair PE at those growth levels. So where does Tesla fall? He doesn't compare them to other automakers, but instead to other tech companies, EV companies, and battery companies. If we look at this list, where these companies are and how much they deviate from their fair PE value, you see that Tesla is about 10 points, 11 points below what their fair PE value would be. Again, this is based on Wall Street's listed expected earnings per share, which they have out to about $8.52 per share in 2025, or 27% earnings per share growth rate. If you plot that out on a expected growth versus a PE ratio, and again, this is that linear relationship, so that would intersect at about 13.8 and rises at about a 0.8 level per percent growth. Then you have companies like Tesla that is about 0.10 or 11 points below what the line should be, so significantly below where they should be if they were trading at a fair PE amount. But the real question is, how certain are we of earnings growth long term for Tesla, for any company at all? Because all of these are just estimates. They're just estimates by Wall Street analysts. Anyone could have an estimate. And how certain are we that Tesla is going to have 27% growth or higher going forward into the future? So what are some of the qualities that make us certain that is the case? And he also asks us questions in that Substack article. He says, will Tesla's profit potential equal Amazon, their retail side, which really isn't a very profitable company, side of the company, or will it be a sort of a cash cow like Apple has been over time, that has these defensible moats that generate tons of cash? So which will it be? What do we think it's going to be? I think it's going to be Apple, and here's why. There are a number of reasons why. Tesla is already a profit machine. Unlike Amazon retail, that's never been a profit machine, Tesla is already a profit machine. What else? EVs are the future of transportation. I think that's completely undebatable. Also, legacy auto's main core competency is the internal combustion engine, not batteries or software. So a lot of the main competitors are really, their core competencies are not in the areas that matter for EV vehicles or electric vehicles. Also, most or all other EV companies, like startup companies or divisions of legacy auto companies, are not profitable. So right now, Tesla has a huge advantage over all of these, a huge huge pricing advantage as they can squeeze and put pressure on them. So these other companies are not profitable. Full self-driving now is immediately available, so you don't need to jump through all the safety beta hoops. I expect it's going to result in a higher take rate and ever increasing take rate for them. And the Cybertruck and other models are coming soon. Cybertruck deliveries we should see this year, and we should see some updates on the third generation for Tesla's their next generation model. So there's more models that are going to be coming soon, continue to fill the market needs for potential vehicles for Tesla. Battery storage is starting to ramp, so that could be another huge part of the business for Tesla. Sold Teslas are still a tiny fraction of the global fleet, so there's still so much room for growth for EVs and especially for Teslas. So you sum all of these things together, in my mind it's very clear that there could be a very high earnings growth rate for Tesla for a long time. Maybe it's 30% like 27% like Wall Street's expecting, and a fair PE would be somewhere in the 30 to 38 range. Maybe it's higher. I would say potentially even higher, and Wall Street's been typically too low in their estimate, but it's significantly higher than where the stock is at right now. So I did some simple projections for Tesla for the next 3 years out, and looking at 2022, they did 1.31 million deliveries, and I'm going to assume they do 50% growth rate in deliveries next year to just under 2 million, and then 45% the year after, 41% the year after. So by 2025, they're selling 4 million vehicles a year. Average selling price decreasing down to about $45,000 by 2025. You get your revenue in there. Gross margins, I'm assuming this next year will still be in the low 20s, about 23%, and the slowly descending down to 21% in 2025. You get your gross profits going from 22 billion to 38 billion by 2025. Global full self-driving take rate, you assume it's about 7% right now on a global basis. Assume they continue to expand what countries it's available in, and the take rate continues to increase. It goes from 8, 9, 10%, and I'm going to keeping the price at just 15,000 for that. Then you have full self-driving 2.4 billion up to 6 billion by 2025, and I have operating costs going at 20% a year, assuming 6.8 billion in 2022, going up to 12 billion by 2025. So you can have operating incomes going from 16 billion to 32 billion, doubling over 2-year time. Put 10% tax on that, so you have 15 billion to 29 billion in actual profit, and 45% growth rate, and then 38% growth rate in 2024, 2025. So appropriate PE using that equation of 13.8 plus 0.8 times the growth rate would be probably around mid 40s to 50 range for Tesla. I would assume I would think would be a fair PE value. Of course, it's going to fluctuate higher than that. It's going to be lower than that like it is right now. But if we get this kind of growth and it bounces back to that fair PE value of around 50 or close to 50, by 2024, 2025, we should be back around the $1 trillion mark in market cap, or even back to an all-time high by 2025 of maybe around $1.3, $1.4 trillion market cap. Of course, if we search Tesla's market cap, it's $418 billion today right now, and we assume in 3 years' time it's going to go to $1.33 trillion. That's about a 47% compound annual growth rate between now and then in the next 3 years. Of course, this analysis doesn't even include any potential profit from the battery or energy storage side as well. So if you're asking what am I doing with Tesla stock, it's a no-brainer. I am buying any shares I can right now. I am accumulating shares, and I honestly hope the price stays low, below what I feel would be the fair value for it right now, so I can accumulate more shares. That's my plan. Of course, nothing here on this channel is financial advice for you, but that's how I see Tesla opportunity right now. I see it as a massive opportunity, and I'm buying as many shares as I can. What have I missed? What are you doing with Tesla right now? Let me know in the comments down below. Thank you so much for watching, and remember, it's in the bag.